Hi everyone. Today we're going to share with you what I have learned about stock gap. Okay, so what happened when a stock gap up or gap down? Okay, so we used to have a strategy that is called power gap. So the power gap strategy is, it's a short-term strategy. So this short-term strategy is usually for just 1 to 2 days trade, okay, or maybe up to 3 days. Okay, what we expect to see is a long candle follow through for the next 2 to 3 days. So, okay, stop loss. Okay, how do you put a stop loss? Is above the opening price or the day low. Okay, let's say you are going to long a stocks, you put the stop loss below the day low. Okay, and or if you're going for short, okay, you will put your stop loss on the opening price or the day high. Okay, for shorting. Okay, so a lot of times you might not see a gap because maybe you are working, maybe you are doing something, you are not watching this counter. But the thing is, what happened during after a gap? Okay, so we see that our strategy, first thing is it must be gap above resistance. So when it gap above resistance, it shows a bullish signal or bullish price action on the counters. So when the price gap, it means what? It means that when before it closed, the investor didn't expect that there will be a good news or there will be a surge in the price. So after the market close, there will be some good news, and this good news, maybe it is a report, company earnings report, earnings double, earnings triple, more profit this year. So what happened is after that it will gap up during the open. So what caused the gap up? The gap up is caused by there's a demand in this counter, and then when there's a demand in this counter, people queue at a higher price. So the buyer and seller match the price at the 135. So that will be the opening price. So this is the based on the demand and supply. So when the price gap up, it means what? It means that there is a strong demand in this counter. People want to buy this counter, and we say that when price gap above a resistance, it is a bullish sign. It's a bullish sign. So what happened is you can enter at the early of the day, and stop loss below the close or below the opening of the it's not close. Stop loss below the low or below the opening of the day. So after that, you realize that there's a 2 to 3 days surge. In the midterm, of course, maybe it's also a continuation. But over here we say that this is a bullish sign. And if you see for this case, also same thing, it gaps above the previous resistance. So a resistance is the point that the price hit and pull back. So if a price gap above the previous resistance, this is a good sign. So what you do here is you can do a short-term entry, enter at the early of the day, and stop loss below the opening price of the day, which is the low of this candlestick. So you realize that the risk that you are taking if you are entering early of the day, and the reward that you are expecting is 1:2 or 1:3 type of ratio. So over here, what about gap down below support? So what about gap down below support? So when price gap down below the support, we are also expecting the price to move down 2 to 3 days in a row. So in this case, this stocks, this is the support level, this is support level, and the price gap down. So when price gap down, a lot of people was thinking, should I sell or should I not sell? So for us is once it gap down below the support, it shows that before the market open, people are trying to sell at much below the previous close price. So people queue to sell 223, 283, 280. So at the end of the day, they match at this 283 price. So people are trying to sell. That's why the price gap down. So this is another case of the same thing, Sam Marine. So after that, it price gap down over here below the support level. This is where you want to get out, and for the 3 days trade, you can do a short-term trade with a stop loss above the opening price or the day high. So this is another case as well, where this is a support level, so the price hit this level and stop dropping. But after that, what happened is the price gap down suddenly, Okay, so when the price gap down below this support level, okay, it's not a very good sign. So you will see a continuation for next few days. Okay, so another case, okay, this is a Keppel Land. After that, the price hit the support level. Everybody expect this thing to hold because it seems like a very strong trend line. But in the morning, okay, when market open, the price gap down. So when the price gap down, it shows you that it is a weak sign. It's a bearish signal, a bearish sign. So after that, there's a follow through sell for the next 3 to 4 days. Okay, so that's the end of what we want to share with you. Okay, the gap down below support or gap up above the resistance. How do you trade it? Okay, how do you manage your stop loss? So how do you manage your stop loss if the price gap down below your stop loss? Should you sell or should you wait? Okay, in this case, I leave the answer to you. Thank you for watching this video. Thank you very much.